Okay, guys, in this video, I'm going to talk about one of the big question not many mortgage brokers and not many banks are talking about. How do you choose the loan term? Most people will give you standard 30-year loan term, but there are options. You can choose shorter term loan and longer term for the loan. I'm going to cover pros and cons for the both, and then you can decide which one is more suitable for you. So first of all, what is shorter term loan mean? That means you have to pay off in a short period of time. That means you have a lower borrowing capacity, because when banks assess your borrowing capacity, they look at your income versus expenses every single month. So if you have to pay shorter term, then you will have to pay more money every single month. That means your expenses are higher, so borrowing capacity is less. Naturally, your repayments will be higher, and when you finishing loan in the less number of years, you pay less interest over the life of the loan. That's simple. Now let's take a look example for a 500,000 loan amount. If you're paying 5.5% for 30 years long term principal and interest, your monthly repayment will be 2,839. If you do that for a 25-year long term, your monthly repayment will be $3,071. That means you are paying 232 extra every single month. In this setup, you are forced to pay 232 extra every single month, which means you are paying off your loan quicker. Now, for some people it is suitable, some people it's not. I will cover it in the next slide. But let me look at longer term as well first. So what does longer term loan mean? That means you have more than 30 years to pay the loan. That means you have to pay little less money every single month, which means your cash flow is good. Banks say, oh, you got so much surplus left, your income is more, your expenses are less. That means your borrowing capacity is higher. Obviously, when you pay for the longer long term, you will end up paying more interest over the life of the loan. Now, how do you decide which one is more suitable for you? When you have to make a decision, I would encourage to look your income versus expenses and see what is the comfortable amount you can pay every single month without having to stress about it. If you want to pay off your loan earlier, you can choose shorter loan term, but that's not the only option that you have. You can still keep longer or standard 30-year loan term, keep it a variable loan, and most banks will allow unlimited extra repayments every single month. What that means is you can freely pay as much as you want, and when things go tight, when you think you don't have a job or something happen, you got extra expenses coming in, and that time you don't have to pay extra because you are not forced to pay extra. Your standard repayments are lower, kept at 30-year long term, but you can always pay extra as you like. So that is the benefit if you keep it standard term, but you can always pay extra. Now, why would you want to choose longer term? Because you will end up paying more interest over the time, isn't it? But some people, they want to borrow more money from the bank because the property is getting expensive, and they like the bigger house, and they believe their income will grow in the future. They know their career path. They believe that they will have promotion in the job or the good business, so they will have more income coming in. Or the partner is not working right now, but they have a plan, they will start working very soon. Whatever the case is, they believe they're able to afford more loan. So in order for them to do that right now, they can extend the long term and borrow more money right now. So there are different scenarios. Which one you like, you can choose according to your needs. Now, can you change your long term once you get the loan? Let's say you like the property, you got long term 30-year standard. Is that fixed for life? No. You can change the loan whenever you want practically. Obviously you don't want to change every single 6 months or every single year, but if let's say after 2 3 4 years you decide, oh, I started off with 30-year long term, but my cash flow is very good now, I want to reduce it to 20 years or even 15 years. So you refinance or you go to the bank and say, can you reduce my long term? Bank say, okay, your income versus expenses, your cash flow is good, you can afford that 15-year long term, they will give you 15-year long term. Similarly, if you have paid off for 5 years, let's say you started off with 30-year long term, and now after 5 years your long term remaining is only 25 years, but you want to buy another property, investment property, or you think your cash flow is getting tighter, you want to refinance for another 30-year long term, which means you are extending the long term. You go to the bank, refinance your property and say, to improve my cash flow, I want 30-year long term. I'm aware that if I extend my long term, I will end up paying more interest over the life of the loan, but this is suitable for my current situation. I want a cash flow. So I want 30-year long term. And most bank will give you 30-year long term. So you can always increase or decrease your long term even after you get the loan. So hope you find this video useful. A lot of good things. And in the next video, I'm going to cover simple trick to pay extra money in your home loan without having any extra income. Okay, it's not a trick, it's genuine, and it works for many people. I'm not saying it will work for every single one, but it works for many people. I will cover that in the next video. Thank you so much.